I reckon Trump stocks could be in focus this morning more than anything else. So I'm just going to start with that, and of course we'll get to the other. So on my list of 3 stocks, Trump stocks, a mix of up and down depending on which sector. So let's talk about the IT sector. IT sector for now maybe limited impact because they're insulated from anti-immigration policies. They have more and more localized workforce, but watch on what is happening with your entire IT pack today. Remember, Wipro was firing yesterday. But in terms of dependence, you have TCS, which has 52.7% of its revenues coming in from America. For Infosys, it's 58.4%. For HCL Tech, it's 64.5%. For Wipro, it's nearly 63%. And Wipro, so a very robust move yesterday. For LTI Mindtree, it's nearly 75%, and for Tech Mahindra, about 22%. For pharma, now, if he's going to crack down on China in terms of pharma, you could see some impact there. So look at pharma stocks in focus and their, dependence on the US. Dr. Reddy is to watch today, 45% of revenues coming in from the US, and then followed by Lupin and Sun Pharma there. I would also look at solar module makers, and this is uncertain. Higher tariffs to China would technically benefit Indian players, but then is he interested in importing from India? Would that be part of a deal? That we can't really say so far. But Waaree Energies, for one, over 50% of their FY24 revenues came from the US, and for Premier Energies as well, they are a large solar cell exporter to the US. So watch out for some of these plays today. You've seen no real action on currency bond deals so far, but I would say IT pharma, one to watch. The other one is, of course, Dixon. Dixon numbers came in and really have been a positive surprise. The stock was up 2% yesterday, a thumbs up on Dixon's Q3 numbers coming in. They've beaten estimates. Mobile segment has driven revenues and margins. Mobile segment, in fact, is 89% of revenues for the third quarter. And just a quick reminder, we will be speaking with Dixon at 9:45 this morning as well. Their revenues are up 117% at 10,461 crores. EBITDA is up 116% at 398 crores. Margins are pretty much flat for Dixon. Net profit is up 126% as well. But I think what's going to maybe excite the street is a possible foray into semiconductor components, because in their conference call, they said that they're looking at a fabrication capex for, for the business going ahead, which could be about $3 billion. And this capex, 75% of it will be subsidized by central and state governments. Because remember, Dixon is the company which has been a huge beneficiary of of the Make in India program, and semiconductors is something that the Indian government wants to move forward on. So I'd watch out for Dixon, despite a fair bit of run-up and valuations which look rich, but numbers at least have been good, and that's sometimes a rarity in this quarterly season. Just Paytm, because yes, Paytm reported yesterday, but I thought what the CFO has said in the conference call was noteworthy, which is why I'm adding it. He says we're very close to profitability. Brokerages have been positive as well on losses narrowing. Losses have narrowed, and some of it was expected because they did sell an important unit, so that has gone into their cash flow, but their loan portfolio has seen a bump up in revenues. CLSA, in fact, has maintained hold with a target price of 820. Target prices have gone as high as 1200, so I'm not even going into that. You have a Bernstein at 1100, you have some others which have gone as high as 1200. So there you have the entire range over there. It says, CLSA at least says that you have seen an EBITDA break even. It's a mixed quarter close to the core. The heavy reliance on lending is something which CLSA is not too happy about. They say pick up in GMV, but some moderation in net take rate. I think the narrowing of losses more than was expected is what will be seen as a positive perhaps for Paytm. So watch out for Paytm as well. So those are my first 3.
Yeah, on the note of Paytm, apparently Group Chief Financial Officer Madhur Deora talking about the plan to turn profitable in the next 1 or 2 quarters.
That's the point.
Apology, I thought you were okay. So okay. Let me move straight to my list of stocks. I was focusing on this list, which is why I missed what Tamanna said right at the start of the Paytm update. But Oberoi Realty is the first stock that I'm picking today. And according to me, it is a thumbs up. purely based on the numbers that the company has reported. Of course, I know that there's going to be quite a bit of focus on pre-sales. I'll come to that in just a bit, but let's wrap up the numbers for the quarter gone by first. Revenue increase of 34%, coming in at 1,411 crore rupees, a significant expansion in margin during the quarter, coming in at 61% versus 48.3%. The EBITDA is up as much as 68%, PAT is up 72%. There's also a small update in the form of a merger of the arm Nirmal Lifestyle with the company, but really the conversation is going to be about pre-sales. And pre-sales have increased by about 33% sequentially, 144% year on year. The concern that a few brokerages have pointed out to is that it was lower than their expectations. It's come in at 1,920 crore rupees for the quarter gone by. It was expected to come in at about 2,500 crore rupees, a large part of this pre-sales being driven by their Thane project and their existing projects not resulting in too much in the way of pre-sales, which according to them is a bit of a negative, but they've all said that there are more positives than negatives, so watch out for this in trade today. The second stock Tamanna has actually told you about, Vodafone Idea, on the back of the news update that we had on NDTV Profit. The Supreme Court has in fact upheld a Bombay High Court order, and the IT department has been directed to refund 1,128 crore rupees with interest. The stock was up yesterday. Watch out for it in trade today. Of course, experts have already pointed out to us on your channel, on this channel, that you should be wary of trading in Vodafone Idea. The last stock that I'll pick is 6,000 crore market capitalization or thereabouts, AGI Greenpack. It's a bottling company, packaging company, primarily focused on the alcobev or the alcohol beverage industry. It's had a strong quarter. Revenue up as much as 7%, 658 crore rupees, but the margins have expanded on a year-on-year basis. They've managed to retain the margins where they are sequentially at about 27.5%, 27.9%. There you go. The net profit as a result has risen as much as 34% year-on-year. Remember, the stock has done particularly well over the last 3 months, bearing in mind what's happened with the rest of the market. And so watch out for that start in trade today.
Okay, and with that, I take over with 3 stocks on my radar. The first one is going to be Zomato. I know that the earnings came during market hours, but we had plenty of updates coming in post-market in the conference call. So I thought it would be worthwhile to point them out as to what the management is saying, and they are in fact saying that capital expenditure will remain elevated over the next few quarters, and based on that, there could be pressure on operating margins. Do remember that the earnings of Zomato came in the last half an hour of trade yesterday, and we saw a sharp drop on the back of that because we saw a contraction in operating margins. And it does seem like it's going to will stay like this for the next few quarters as well. But the management is suggesting, to be fair to them, that once they're out of this expansion phase, profitability could sharply turn upwards. But until then, there's going to be a little bit of pressure. Now, the question really is, does this mean that Zomato could potentially will stay where it is? Remember that a handful of brokerages on the street have cut their price targets for Zomato, even though they are currently higher than where its current market price is. CLSA comes to mind. That is the one which has had a price target of 400 rupees per share, but we have not seen a cut there. We move on to MCX. It's been a very steady quarter, something on expected lines as well. The stock has done phenomenally well over the last 12 months as well, one of the biggest gainers coming through. We have revenue rising around 5% sequentially. We've seen an improvement in operating margins coming in at around 64% sequentially against 62.8%, and profit also consequentially going up by around 4% quarter on quarter. Next up, we have L&T Finance. This is where we have a little bit of a mixed quarter, but more towards the negative. So your net interest income sequentially has risen 2.5%, year on year 15%, but the provisioning has moved up substantially, sequentially up 32%, and that's the reason why we may just see a little bit of pressure coming through for L&T Finance. And consequently, because of the higher provisioning, we've seen profit decline by nearly 10% quarter on quarter, and it's going to be about asset quality going forward for L&T Finance, but it's going to be a thumbs down this morning for me.